Okay, so today we're going to be doing another video involved in having a look at my trading platform. Basically, in the previous video, we actually saw that people really enjoyed watching what I was doing on the trading platform. And as I've noticed, I've been putting out a lot of videos about theoretical stuff, but now what we're going to be doing is showing you some of my technical analysis breakdown. And what it's going to do is give you an insight into when I open up a chart, what do I do first? What sort of technicals am I looking at? What sort of numbers do I want to see? What sort of setups am I going to look for? And what it's going to do is give you a little bit of a commentary into how I make my investment decisions. First things first though, just to remind any of you, if you want to keep updated with interesting educational content about trading, investing, and wealth management, you need to make sure to subscribe to this channel. It'll keep you updated on weekly educational content that I'm sure you're going to enjoy. And after this video, I'm sure there's going to be something in that video library that might help you as well as watching this video. So back to what we were talking about. It's going to be a commentary. It's going to be something interesting where you are able to see more into why I do what I do and how I analyze with certain technical indicators. Like I mentioned in the previous video, the setup MetaTrader video, this is just going to show you a little bit more about how someone who runs an investment group makes decisions, because what I'm going to be doing is basically giving you my live analysis. So if I find something that I really like, it's going in my fund. So, you know, that's a big step for me. This is not just trading personal money, this is trading investment capital. So I'm going to be very serious about these decisions. You're probably going to see it's going to be a serious side of me, but it's still going to yield a pretty interesting video for you. So always make sure to stay tuned to this video, and let's get right onto the charts. Okay, so basically for today, what I'm going to do on these charts is just walk you through a breakdown of the markets I want to watch. So I've basically got my main live platform open, so I've got quite a lot of the instruments open right now. But I'm going to just give you a walk down of some of the things that I'm looking at in the market when I want to make my investment decisions. Now, most importantly, what people need to realize is when you're having a look at your markets, you know, like I said, going to be a bit more of a professional attitude to this video. So what you're going to see is that I'm going to really take, you know, a lot of serious opinions and stuff. So basically what I'm focusing on the second I get onto the platform is I'm first having a look at my commodities. So initially my goal is to try and have a look at exactly what the commodities are doing, because that at least gives me an insight into some of what the commodity weighted currencies are looking like. So obviously you've got your Canadian dollar and US dollar that can be seriously pitted against the price of oil. And also what we've seen right now is that mid-2018, the markets are seeing a huge improvement in Britain because of the oil price that was rising throughout the whole of May. You know, if you look at that correlation, there's a huge correlation there. So basically, I'm first focusing on the simple XAUUSD dollar, which is the gold. And then I'm just basically having a look at exactly where the weekly market is looking like and where the monthly market is looking. So basically right now, we've been relatively flat in the last 2 weeks. So you can basically see here, we've got on the weekly chart, you can see there's quite a thin candle right now. So this video is being filmed on Tuesday morning, so I'm sitting at about 12 in the morning on Tuesday. So this is very little movement. This is effectively one full trading day of movement, so I'm not really going to judge that candle. But going back, we've got a pretty you know, medium looking candle. You know, this is not too crazy. The wicks are pretty long. But if I'm, you know, logging on and I'm seeing that the weekly candle is looking like this right now, you know, I immediately want to work out what other markets might be affected by such a big drop in the gold price. So whether I might be looking at indices, or I'm looking at FX, or even if I want to have a look at a stock, I want to work out what is going to be impacted by a weekly drop on a gold price like that. And then most importantly is just having a look at where the overall trend looks like. So as you know, to anyone who follows my Twitter page, just don't forget, on the Twitter page, you'd be able to follow me by actually having a look at my trading plans that I send out on a daily basis. Well, weekly basis, let's call it. Sometimes I get busy. But anyway, the trading plans, the economic data that I'm posting out, and most importantly is going to be all of my verified trades. So also when I open a trade, I tell my Twitter page. When I close a trade, I tell my Twitter page. And on top of it, there's a verified trading track record tracker on my trading portfolios, which allows you to actually see that I'm really doing it. I'm not just talking about it. Make sure to follow Morgan B. Sampson on Twitter, and let's get back to the video. Okay, so just like I was saying, this was a trade that I was actually looking at when I saw basically, there's a serious trend line forming over here. And I'm obviously looking at, okay, are we going to break below this trend line? Are we going to test this trend line and bounce? And what I had done in the previous 2 weeks is I was basically taking advantage of these two candles. So if we look closely into the 4-hourly candle, you can basically see how I was taking advantage of these massive moves up. I think on the gold trade, I must have cleared quite a serious amount of profit. And it was specifically because I was taking advantage of seeing, okay, well, we're on an upward trend right now. So we're making higher highs on these levels. But what I can see is we're getting a form of depression here, or should I say compression. So you can see that not only are we making higher highs, higher lows on the bottom here, the higher highs are not continuing very much. So we have a very, very high push here, followed by a strong exhaustion. So very, very, basically the high push follows by a long exhaustion. But then here, as you can see, as the next high is lower, you can see it begins to form an uptrend. So over here is basically the formation of an uptrend, but now you can see that it's coming to the past resistance. It's tested there, it's tested again. So this is becoming a serious compression point, which we call a, simple breakout, whereas you're going to see price moving either up to the upside or to the downside. Now, it's up to us to decide where we want it to go, but that is something that I'm going to be looking at. Now, just so I don't get bogged down on this, I'm going to move on to something like a currency. I don't want to get us sort of stuck in on a 30-minute commentary, but basically the next thing I'm going to look at is the Euro-US dollar, because as some of you know, the people who follow my Twitter page, basically since December, I have been posting trading plans, economic data. I've been posting tons of stuff about the Euro-US dollar short that I took advantage of right over here in this region. I mean, people thought I was mental, but we took advantage of it. We made a serious amount of money, but we left a fortune on the table because we got out early. But luckily, some of our students stayed in on that trade. So basically what we were looking at on this opportunity was seeing when price was going to be coming back down to this level here. So what I'd basically be doing right now is first measuring exactly what those levels look like. So then I'm basically taking notes down. I'm saying to myself, okay, Euro-US dollar, this is a strong resistance, a strong historical resistance, really strong support level as well, given how fast price came down to that level. And it seems like it could possibly bounce. So basically what we've got here is a formation of a Gartley. So a Gartley is being basically past resistance equals future support. So as the price breaks through, you're going to see that breakout become the new support level. So my goal here is to try and work out that effectively what we're looking at is the 116 to 117 level. Okay, so let's call it the 116.5. So basically what I'm looking at now is the 116.5 going to hold, and are we going to see a bounce upwards? We could possibly see a bounce back to the previous high. So that would be target number 1. Target number 2 is when we could possibly have a 61.8, so possibly have a fib retracement. So that's also going to be one of my target number 2 levels. Or we could possibly have a dead cat bounce. And a dead cat bounce usually forms from head and shoulders. So if you have a look here, we've got the weekly chart. Now this is just the weekly chart, and this is me just popping a few templates on and having a look at where my targets might look like. If we've got the head and shoulders forming, so we're going to have shoulder number 1 forming, and then right up to the head, right in the middle, followed back down to the sort of bounce right off this pivot point, which basically is forming the new support level. We could see a move back up here. Now, if you look very closely, the previous shoulder is on the same level as a 50% retracement. So the possibility that we might see price move to this level is obviously sitting within the fib retracement and the head and shoulders technical strategy. So right now I'd be jotting down, okay, that's what I'm looking at. And then I'd be moving on to saying, okay, well, what happens if price moves below? You know, where we're looking on price moving below. And that's really where I'm going to be going down to the, you know, daily charts and the 4-hourly chart. And what I'm going to be looking for is where I could possibly see the price moving up to that 61.8, so possibly moving up to this level over here where we said, you know, target is. And I'm going to try and look for the lowest cost entry points. And what that basically means is the lowest amount of risk. So what I'll possibly do is go into micromanaging this position. I'll go right into the hourly charts, and what I'm going to basically look for is a form of a breakout. So I'm going to look for something where price is testing a level and keeps wanting to try and push above it. And I'm going to get in on that level. And hopefully I'll be able to get in tight enough to get in on the trade without landing up with the trade falling really, really fast below where I entered and leading to me losing money. So that's what I'd consider as a low risk entry point for something that could be basically a dead cat bounce, a head and shoulders, a 61.8, or the formation of a new uptrend. So I've already identified in the space of about 4.5 minutes that I've got 4 technical strategies that I could apply on this specific trade. Now, that's just looking from the top down. When I'm able to do things like put statistical reversion models on top of this, I'm able to do quantitative calculations and have a look at what the data looks like all together, able to actually put numbers to all of these predictions, I'll be able to understand what the probability of this trade is. So let's say, for example, I land up having 5 to 10 different reasons why I see the trade moving in a certain direction. I'm going to obviously capitalize on it. But if I don't see enough probability showing me that I want to enter into that trade, I'm not going to take it. What I am going to do though is watch the trade. So when we know that we can correctly make a prediction, we know we could probably correctly predict what it does next. Think of that carefully. So if I'm able to predict where something might move, even though I'm not trading it, that means I have a high probability of knowing what might happen next. And that is where you can profit on a trade that you miss. Now, it's a question that a lot of people ask me, what do you do when you miss a trade? And what people don't realize is a strategy always plays into a new strategy. So meaning if we have a move in one specific direction, in a strong direction, we're going to see a strong direction in a different direction. And we have to work out what happens then. So where I will be watching this Euro-US dollar trade is that I'm going to be waiting for those ideas to play out that I thought, you know, it could have been a Gartley, it could have been a head and shoulders, could have been the formation of a new uptrend, the 61.8, or the very last one, it could be a double resistance test of that previous high level, that historic high. So for myself, I'm going to have a look at where I want to enter on the market on certain strategies and having a look at certain ideas. But the second I come to realizing that I might not be wanting to get into that trade, I'm going to want to find something else to get my money into. So at the end of the day, it also comes down to if your pot has only one idea in it for the week and you need to be turning something over, you need to make sure you work on that idea until either it's completely impossible or until you can prove that it will work. So it's kind of that thing of if you just push an idea aside and immediately look for another one, if you don't find another one, you have to respect that previous idea. Go look at it and see if you can make it work. But that's just a simple insight. You know, I'm already running over, 13 minutes on this recording. I think it's about 16 minutes actually. And I don't want to make this video too long because I think we should do a part 2. So I'll tell you what, let me know in the comments down below if you feel that just watching me do commentary on only 2 currency pairs helped you. If you say it definitely helped you, then I tell you what, I'll do a part 2 and a part 3 for you on different currency and asset class pairs. And for a bonus, I'll actually throw in a Bitcoin analysis. I think that could be quite interesting given the fact that I actually hate Bitcoin, but you can see what I'll look at it as a technical analyst. So once again, everyone, like I said to you, if you want to keep updated with all of this content, make sure to click subscribe. It's going to keep you updated on the weekly uploads I've kept on forgetting to put up. Like I said, I'm sorry, but the uploads are coming now. So what I can say to you as well is if anyone wants to also find out more about what we do on the investment education side, make sure to follow to the website www.msequitiestrading.com. What that's going to do is show you everything about my company, what we do, how we run an investment group, how we run education. We train students all over the world through an online training academy. Make sure if you want to get into contact with us, you can either email study@msequitiestrading.com, link in the description below. And lastly, I just wanted to say thank you for tuning into this video. Once again, hope you have a good week of trading, and I'll see you in the next one. Cheers for now.